the kind of numbers that we have seen coming in from Britannia. They came in post-market yesterday, and the stock is taking a beating in today's trading session. A lot of it has to do with the kind of miss that we've seen on the PAT, EBITDA and EBITDA margins. This time, their SAR, which is a part of the employee cost, that has inched up quite significantly, up 47% on a sequential basis, which is what has weighed on EBITDA this time around. But more importantly, it's important to notice that brokerages have maintained their as well as target price. At least the top 5 or 6 brokerages that we track closely have not made any revisions in Britannia's stance or target price. But it's actually a lot to do with the management commentary, and that's one of the reasons why the stock is falling, because they have said that they do not see wide fluctuations in commodity prices going ahead. While that is a positive, they're also saying that they do not see any more price revisions or price hikes going ahead for the company. While that is good from a consumption point of view, from the end user point of view, that's slightly weak coming in from the company perspective, and that's the reason why the stock is lower by 4.5% as we speak. And let's just once again revisit what the management had to say in terms of commodity outlook and pricing action, if at all.
I think from here on, we do not see the kind of wide fluctuations that we've seen on commodity, and we always perform much better in stable conditions. During the turbulence in commodity prices, like what we've seen in the last 2 years, it's always difficult to navigate price increases and estimate what it's going to lead to, etc., etc., etc. We have covered most of our inflation through our price increases. We are done with that, and we are in a good position.
Okay, so that's the word coming in from the management of Britannia, and of course muted first quarter is what we've seen. No eye on the volume figure yet, but the brokerages, Macquarie estimates this number to be at 4%. Nomura believes that this could be a 2% year-on-year growth for volumes. So lots of discrepancy over there. But Deepan, what are you making of Britannia's numbers? And not only Britannia, if you throw the light on the entire FMCG pack, mostly it's been either good or inline set of numbers coming in. Any signs of a recovery in terms of demand now?
I wouldn't call these numbers good by any stretch of imagination. A good number is something where you have 15-17% type of top line, bottom line growth. And I don't think any of the MNC or the domestic FMCG companies have delivered those kind of numbers. I think there's a structural and secular stagnation in the entire industry because a lot of products and a lot of the categories have become mature. And now their growth is in line with low single-digit growth, which is in line with the population growth. It's growing as an industry, it is growing much, much lower than the GDP growth rates also. So from an investor's perspective, the entire sector is a complete avoid. There could be a few outliers, companies which are still doing well, like say Varun Beverages comes to mind. Maybe some of the snacking companies like Bikaji or some of the other food companies. But by and large, I think the likes of Britannia, HUL, Nestle, Godrej Consumer, Colgate, they all, I think, have to be avoided, and investors may find it painful to sell. But if you want your portfolio to outperform going forward, you have to be zero weight all these traditional FMCG companies.